Good morning, everyone, and welcome to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Well, in the spotlight today, there's only one company to be had, and that is Paytm. The company came out with a very surprising announcement overnight, wherein the company has said that their board is going to consider a share buyback plan on December 13th. Yes, you heard that right. A share buyback plan being considered by Paytm, which so far does not even have a history of making any profits. So if you look at, the announcement, of course, at this point of time, there are no other details available because the consideration still has to be, made. The board will decide on December 13 whether it wants to go ahead with a buyback, what will be the quantum of the buyback, what will be the, the price at which the buyback would be done. So all of those details are yet to surface. They will probably come out Tuesday after the board meeting. But if you look at the sentimental aspect of this, clearly this is a move, on towards trying to provide some sort of support to the stock price after the stock taking almost a 75% battering since its IPO almost 13 months ago now. Remember, Paytm IPO'd at a price of about 2,150 rupees per share. Currently, stock price is somewhere in the range of about 500, 550 rupees. So clearly, a lot of drawdown has happened there. But at this point of time, the company feels that maybe it is in a position to return some of the cash that it holds on its book to its investors, and in the meantime also provide support to its battered stock. Now, if you look at the cash position of Paytm, it's somewhere in the vicinity of about $1 billion to $1.1 billion at this point of time, which also includes the net IPO proceeds of about 5,500 crores. Now, remember, when Paytm was IPOing, it had indicated that the money that they were raising from the fresh issue of capital, that was largely to be utilized towards acquisitions, also enhancing and expanding its own services, and some small part of it, about 1,800 crore, towards general corporate purpose. So it will be very interesting to see what could be the size of the IPO that Paytm does, what would be the price of the IPO that Paytm does. Now, remember, this just comes days after CLSA India had upgraded the stock to a buy rating from a sell rating earlier, indicating that the valuations had priced in all of the negative with respect to the company, and that the cash position was so comfortable that at this point of time, it did not make sense to be bearish on Paytm. That said, there are concerns, in the market at this point of time, given the fact that this is a company that is trying to do a share buyback, even though it does not even, as of yet, does not have a history of making any sort of net profit. So there is concern around the capital allocation policy, whether it is the right thing to do or not. Of course, only time will tell, and only the market will tell later today, when the stock opens for trading at 9:15. That said, if you look at, go by calculations and go by SEBI regulations, it is possible that if the company were to choose the tender route to do the share buyback, they could buy back shares worth as much as 4,000 crores, depending on their current net worth and their current cash positions. Also, if they were to go through the market purchase option, then the buyback size would have to be a little smaller, somewhere in the vicinity of about 2,000 to 2,500 crores. So clearly, there is a scope for the company to do a decent sized buyback at this point of time. But what sort of price that buyback will happen at, I think that will be a key determinant, because any price that would be lesser than the IPO proceeds will clearly, probably not be as beneficial for investors, especially those one who have held on to the stock or still sitting on the stock since they, bought them at the during the IPO. That said, there are also concerns. Some market participants have expressed concerns that this could be another easy way to provide an exit to the private equity investors or pre-IPO investors of Paytm, who now, by the way, are allowed to sell their shares in the open market. So a lot of ifs and buts about the share buyback. Clearly, at this point of time, even the market itself, it seems a little divided whether it is for the benefit of the shareholders, or this is probably indicating, just like in the case of Nykaa a few weeks ago, that the management at this point of time is a bit more worried about the valuation and the sort of battering that the company's stock has taken over the course of the past 12 months. So let's see. We will know the verdict from the market at 9:15, but till then, this is at least my side of what the Paytm share buyback could mean for investors and of course for its stock going ahead. Moving on to the trade setup of the day, and it is looking like a very positive setup. After 3-4 days now of very lackluster opening on the street, it seems like we are headed for a gap up move on the Nifty 50 index. If you look at the SGX Nifty futures, they were indicating almost a 50 to 60 points up move for the benchmark index. Generally, any move above 50 points is considered a gap up according to technical analysts. So clearly, this will probably qualify as a gap up movement if we do end up seeing a 50 point up move on the Nifty. Also, the cues from Wall Street actually were pretty good after almost 3 to 4 days of sell-off on Wall Street. Yesterday, you saw all their major benchmark indices ending with very sturdy gains, in fact, and you could see that because there was some bit of bargain hunting and bargain buying creeping into the market. Also, more importantly, if you look at the bond yields, they still continue to rise. I mean, the 10-year bond yields rose almost 5 to 7 basis points yesterday. So clearly, there was no comfort on the bond yield side, but stocks still rallied despite that fact. The thing that could comfort our bulls clearly is the dollar index as well as the global crude oil prices. Global crude oil prices rallied to about $79 per barrel, but then by the end of the trading session, they again came back towards their day's low. So clearly indicating that at this point of time, the crude oil market really is lacking confidence on the outlook for demand going ahead, even though the world's second largest economy, China, is taking very rapid steps to reopen itself. If you look at the US dollar index, that also closed lower. It's now, hovering around the 200-day moving average. So clearly that is also a positive for emerging market currencies as well as emerging market equities like ours. If you look at the F&O cues of the day, yesterday we did see some bit of long positions being built up on Bank of Baroda. You saw Coromandal's December futures also seeing long positions added. On the short side, you had Sun Pharma, LTI Mindtree. These two stocks really saw a decent amount of short positions being added by investors. Sun Pharma, of course, after that bad news that came out on the Halol unit, which I will touch upon later. Also, if you look at the Nifty's option chain, clearly you could see a decent amount of selling of the 18,800 strike price call options. So it will be very interesting to see, if the index faces resistance or maybe some sort of sell on rise sort of activity emerging in the market when we do see the gap up opening later in the day. Whether it sustains or not, clearly at this point of time, looking by the option chain seems to be a little suspect. Moving on to the news makers of the day, and two very interesting companies, and of course blue chip companies from the Nifty index. Sun Pharma Industries, yes, yesterday the stock fell about 3.5% after reports came out that its Halol unit, which is also its biggest unit, received an import ban. Yes, import ban from the US FDA. Clearly the issues, the regulatory issues around that unit does not seem to be going away for the company at this juncture. That said, compared to, say 5 years ago or 7 years ago, when Halol used to be a big chunk of the company's revenues, at this point of time, according to a clarification issued by the company, Halol only, provides or contributes about 3% of the US revenues of Sun Pharma. Also, the company said that the import ban on Halol unit will not have any sort of implications on its revenue guidance for FY23. So that should be a positive for the stock, and you could see some bit of buying happening on that counter. Also, they said that, more importantly, they said that the specialty business in US will absolutely not be affected by the import ban on Halol. So at this point of time, some bit of clarity coming out on that news, and I think you could see some bit of a bounce back on this counter when it opens for trade in just about 6 minutes. Moving on, the second stock would be Hindustan Unilever. Yes, HUL, of course, its buying spree is continuing, is deploying its cash at this point of time in market to enter and foray into some niche categories, if one could say that. They have acquired a strategic stake in Oziva as well as Wellbeing. Now these are companies that are involved in the wellness and nutrition and healthcare space. So clearly HUL at this point of time is seeing a very big opportunity in these segments of the overall FMCG market, and it will be interesting to see. Most of the analysts were quite optimistic about the acquisitions. Clearly the valuations of these acquisitions were also not that expensive, so it seems like it seems like a good capital allocation strategy by HUL. but it'll be interesting to see how the market reacts to these two acquisitions. Moving on to the top brokerage bets of the day for me today, and the two of them are actually very interesting names and largely from the oil and gas space. RIL, JP Morgan came out with a note earlier in the morning today with the overweight rating on the stock and a price target of 3,065 rupees. Now, they believe that the stock returns in 2023 for RIL would largely be linked to the potential listing of Jio Financial Services. Remember, RIL had announced post its second quarter earnings that it's going to demerge and list its financial services arm, that is Jio Financial Services. Now, according to JP Morgan, at this point of time, the street has not ascribed any sort of meaningful value to this subsidiary. So it will be very interesting what sort of valuation at which Jio Financial gets listed, and clearly ahead of the listing, you could see that driving the demand for RIL's shares as well, because there is a swap ratio of about 1:1 as far as the demerger is concerned. Also, JP Morgan is of the view that FY24 earnings could see a much better performance compared to FY23, largely because refining margins would have stabilized in FY24. Also, they're expecting a better performance from the Petchem business, which actually did suffer in FY23 so far. And lastly, they're expecting a very strong performance from the retail segment to continue. Remember, the retail segment or the retail operations of RIL were the major drivers of earnings in the second quarter, along with Reliance Jio. So clearly, they're expecting that the reopening theme and the pent-up demand thing will continue for Reliance Retail and therefore drive earnings for that segment. So that is JP Morgan on RIL. The second brokerage note that I was very interested in came out from HDFC Securities, and this is on Savita Oil. They have a buy rating on the stock with a target price of about 369 rupees. Now, this is a company largely involved in the oil lubricant space. Now, according to HDFC Securities, they see a scope of about 18% annualized growth in sales for the company in the coming years. They believe that Savita Oil is a good proxy to the revival that we are seeing in the auto and industrial sector, lubricant sector at this juncture. According to HDFC Securities, the valuations of Savita Oil are also quite cheap compared to the MNC listed peer that it has, in the bourses. So clearly referring to Castrol India there in terms of valuation. So maybe, we have seen Castrol get into front-end integration with the strategic investment in Key Mobility. But at this point of time, a more pure play stock would be Savita Oil, according to HDFC Securities. And that is the reason why the brokerage firm has advised its clients to buy the stock around 322 to 328 rupees. And just in case there is a dip in the stock towards 289 rupees, then to buy those dips as well. So a very bullish call coming out from HDFC Securities for the next 2 quarters as far as Savita Oil is concerned. Moving on to the stock takes of the day, and 3 stocks on my radar this morning. 2 of them, of course, are technical picks. One is Redington and the second one is M&M Financial. Getting to Redington first. Now, if you look at the technical charts of Redington, they are clearly showing a very strong momentum at this juncture. The stock has given a breakout from a head and shoulder pattern on technical charts, according to GEP Capital. They also suggested that the weekly RSI of the stock at this point of time is inching higher and is sustaining itself above the 60 level mark, which generally is an indicator that there is strong amount of buying momentum as far as the counter is concerned. And that is one of the reasons why GPL Capital, I beg your pardon, is at this point of time seeing about a 23% upside in the stock to a target price of about 235 rupees in the coming 3 to 4 weeks. So an interesting pick from GEPL there. Remember, Redington also was at a record high, so there has been already a good upside had, but clearly GEPL Capital believes that there is decent amount of upside still left on the stock going ahead. So that is Redington. I'll come back to M&M Financial, but before that, let's quickly take a check on the market. And clearly, it's been a strong opening. Not as much of a gap up as we expected, but a 40-point uptick on Nifty at this point of time. Sensex higher by about 140 points. If you look at the advances and declines, they are quite positive. 1,575 stocks advancing on NSE as against 246 stocks declining on the NSE at this point of time. Individual counters, M&M, Kotak Mahindra Bank, Nestle India doing quite well on the Nifty. The Nifty Bank is higher by about 0.2%, so clearly matching the gains that we are seeing on the benchmark, that is Nifty index. Banking names pretty good. PNB up about 1%, IndusInd Bank up about 1%, SBI about 0.3%. PSU banks, remember, saw a massive short covering rally yesterday. After that, the extension of that held to maturity, measure that the RBI came out with during the policy. Now, this measure will allow these banks to not mark to market the government securities they have been buying since September 2020 till the March 2024 now. So any losses on their bond portfolios need not anymore reflect on their P&L account, and therefore that will artificially boost their earnings in the coming quarter. So that is a big relief coming out for the PSU banking names, and that is one of the reasons why you're seeing such continued buying on those counters. Coming back to stock takes, M&M Financial is my second pick. Now, if you look at again on the technical charts, this stock is looking quite good after a decent amount of comeback rally that we have seen on this counter the past 3 to 4 weeks. In terms of pattern, the stock is making a higher highs as well as higher low pattern. That generally is a pattern that you see when there is a bullish momentum on a counter. Now, the weekly as well as the daily RSI, which is a momentum indicator, that also is showing very bullish momentum. It is sustaining itself above the 60 level mark. As I said earlier, that is a good indication that there is still buying momentum on the counter, and that is one of the reasons why GEPL Capital sees about 14% upside on the stock with a target price of about 275 rupees in the coming 3 to 4 weeks. So those are my two technical picks. Coming to the third pick, which is a sort of a fundamental and a news related pick, and that is HCL Tech from the IT space. Now, a very interesting update coming from the IT major. They have said today in an exchange filing that they now believe that they are going to be, or at least their revenues are going to meet the lower end of their FY23 sales growth guidance of 13.5 to 14.5% in FY23. So clearly, just before the end of the third quarter and the beginning of the fourth quarter, the management, it seems, is indicating that they are going to be at least be able to meet the lower end. So I think that is largely going to be a little bit of a negative for the company or for the stock. That said, another note coming out from Credit Suisse, very interestingly, they have said that they believe they could see as much as of 20% correction in the valuation of HCL Tech going ahead, because they believe that the current valuations of majority of the big IT companies, that are your top 4, top 5 IT companies, at this point of time are not sustainable given the worsening of the macroeconomic scenario in the US. So a very strong update coming from Credit Suisse, and we'll have to wait and see how the market reacts to that, whether that will really result in a major correction, because at this point of time, Credit Suisse is suggesting that HCL Tech, Infosys, TCS and Wipro could see further correction of about 7 to 27%. So that is a big sort of a downside that Credit Suisse is pointing towards. On that note, it's a wrap on the show. Please, as I always say, keep commenting, keep letting us know your thoughts, your criticism, your stock queries on the comment section below. And also you can follow us on the social media links that you can see at the bottom of your screen. Also, for rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live at 3 p.m. with all the day's trading action. Till then, have a great day.